Truist business line of credit up to $100,000. KeyBank up to $50,000. No doc. How about other business lines of credit alternatives? That'll be the purpose of this video, to go into what are the alternatives besides a Truist bank or a KeyBank, these more regional type of locations or credit unions, top tier A grade banks won't approve you, or you just don't get enough, or you're looking for more. What are those alternatives to add, and how much could you use to earn enough in return for gross profits, net profits, your margins, be able to use this money effectively to double, triple, quadruple your revenue/sales, increase your depositing frequency, be better off managing the operations of your business, having enough working capital for whatever uses you need to look at for fixed and variable costs, cost of goods sold. You have a lot of complexities in the business, different revenue generating streams where from month to month you go low, you go up, or you're stable, or you're trying to scale but not sure quite enough yet on how to get that money to be able to do that. You have everything in plan, getting more inventory, purchasing in bulk, going through wholesale, making sure you have enough for your marketing campaign or campaigns, advertising, using this for real estate, being able to have enough cash flow to continue moving you over, cover certain costs, certain builds, have enough for rehab costs, other things you can withdraw from, and for a lot more uses, expenses, as much as growing your revenue and more. So I'm going to get into a little bit of the points with like a Truist bank and a KeyBank, but this video's purpose is more for what are the alternatives if those don't work. So many people are caught up in this dilemma of, well, I didn't qualify here, let me just go find out here, and then they start applying anywhere and everywhere. Even if it's just a soft pull initially for pre-qualification, it's not good having too much recent activity, just applying anywhere and everywhere. It shows many things, one of those being desperate, two, you've been getting declined from many different places, and there are many more reasons that I can get into, but those are just some of them. And making sure you protect your credit, that's what's most important. Not just going to apply anywhere and everywhere, then being overpromised and underdelivered. Yeah, come over here, I can help you get a business line of credit. And then they bait and switch you. They give you a hybrid advance or a merchant cash advance / term loans type of option with bridge short-term funding when you have a longer need for working capital. Maybe you just can't get enough, or you have these 2 to 3 contracts you're trying to secure, and then your ROI at the time that it's done, you're looking at overall cost, moving into a building, a new location, trying to get money for a new startup, you're getting into a catering part of your business, or you're going into another facility, or you're looking for other ways of bringing in inventory from other sites and other locations, as in other sites for your other businesses, things that are added to what you currently have. And there are many other uses. So with something like a Truist, without getting too deep into the whole how it works and application process in this video, one thing you have to know about with business lines of credit, they normally go up to about $100,000. That doesn't mean you will get that. Just keep this in mind too. The majority of banks, whether they're online or offline, you can go in the branch, do it online. A lot of the times you see approvals between 10 to 20% of your top line revenue for the last year is what they're going to look at. The last 1 to 2 years, they're going to base it off of that and what's going on in the activity. There's going to be a few different numbers to be multiplied, divided by, a few things like that. And that can adjust to see how much you would get qualified for. And with some of these where you're not producing any revenue, like let's say you were to turn to perhaps a KeyBank where you don't always have to have an established relationship, yet they are more regional. They are not located everywhere, as is Truist. They're not located everywhere as well. They are big enough for what they do, but they're not, again, available for everybody. I've helped out a lot of people with these two. One, in fact, just recently where they had somebody who wasn't in the location anymore, but they're working things out, and then a few others who are doing the same thing in those circumstances. But with like a KeyBank, or let's start with Truist first. When you're looking for a business line of credit or like a business loan, a lot of the times they will want to see a seasoned LLC. They want to see an LLC of 2+ years. So it's not to say it isn't completely startup friendly. That's not the case in all matters, but they want to see a 2-year LLC on the business side that has been established, which is nothing wrong with that. And what they're looking for in terms of credit, I would say normally 700 or 720 plus, but being more lenient on the 680, sometimes 675 and 660. But I see more of a 680 plus, 700 plus. But if you're in the 720 and above, even better. It's none of this 750, 751. If you're trying to go get certain business credit cards, the more premium, exclusive cards where they're going to ask for 750, 751 or 800 and above. For the business line of credit, it's a little bit different. And then utilization, normally across the board, not only with Truist, but I see this with like a KeyBank and others. A lot of the times you want to have your utilization under 30%. If you can have it underneath 10%, I know that's quite a bit to ask for, specifically when you have more than one revolving account and you have things that are going over and over and you're carrying balances over to the next month. You're not paying it on time. You're not paying it early. It revolves over. You have added debt on the business. Then you're taking on more on your personal if you haven't freed that up yet, or that's already over leveraged. So you're finding ways of trying to get a line of credit to pay down certain debt from these credit cards. From your personal side, you're looking to get additional funding to help you pay that down, to then be eligible to then go get more in terms of business lines of credit down the road, get an increase, and then be able to also have these other options like getting a lump sum, getting an SBA loan on top of that and more. So those are a few of the points that, like with the Truist small business line of credit, they will be looking for. And the application is pretty standard in how it works. You can go in branch, you can do it online. I do it in branch even better. At times they may even call you to conduct, just to go over a few things of your business, to gather certain information. So be ready for that just in case. But without going too deep into all of that, it's pretty standard of a process what they would ask for a lot of the times. Just personal and business information, go about your business operations a little bit, just describe a little bit about what you do. Your address, home address, things like that, your business address, making sure. And that's another case too. When you're trying to go get business credit cards and like business lines of credit and a lot of this, when it comes to banks like that, and more so business credit cards more than anything, is you want to make sure the foundation of your business is set up correctly. So you want to have your EIN, have an EIN letter, certification of formation within your state, within others. If you have a registered agent somewhere else, you're filing a foreign entity underneath your LLC for a different state so you can have access to those banks that you would have not been able to be given otherwise, just being where you are now. And if you have businesses in different states, now that's a whole different concept, and then how you filed underneath those separately. Or you have a holding company and then you have all these multiple LLCs, probably different rental properties, or different things that you have established commercial wise and so forth. So those are a few key points that I wanted to mention here today. And even with them, a lot of the times, as well as like a KeyBank, you do not always want to have over 2 to 3 inquiries, hard inquiries, in the last 6 months. Ideally, sometimes they can stretch, but ideally you do want to have no more than 3. Try not to have more than 2 to 3 in that. And they usually pull from Equifax. That's also something to understand, is that each one of these locations can be geographic dependent, but for the most part, Truist, they pull from Equifax. So you can have 3 producers of products. Maybe you walk away with 2 business credit cards, or over time you get 2 business credit cards, a few things or 1 thing on the personal side, and then you walk away with a business line of credit. So let's say 3 in total, not going 4 or 5. And so that can happen as soon as you open up a business account. If you don't have a business checking account, savings, and that's preferred. But if not, I've seen approvals be a lot less. So with like a Truist, kind of like a KeyBank, a lot of the times they're going to approve you the very least. And I've seen those who don't get approved for as much without a business checking account, and their credit, and it's not as lenient, and they might be able to go less in their business credit cards, like 620, 650 plus and above. Then at that point, you want to make sure that you have those little pieces together, and that you have the right access internally to be able to help you get approved. But at that point, I see it normally at about a $5,000 amount. Those who end up having a business checking account, savings, and this and that, and if they've had a previous relationship with, if you already have things on the personal side, that's going to help you get approved for even more. There is this whole comparable credit on the personal side on what you already have established, and trying to approve you for 2 to 3 times plus the amount on the business side. So even people who come in with like a 5,000, even 10,000 on personal credit, I've seen them walk away with double or even triple, quadruple at that 20 from 5. And then also that's where a lot of people begin, is that $20,000 range. And then there's the business line of credit that would normally approve what I've seen less than a credit card, but that is based on a case-per-case basis. So those are a few things on the Truist. Now, KeyBank, and then I'll go into some of the alternatives. And there's a little bit more on Truist, and I'm not going to cover too much in this video because I do want to eventually focus on the alternatives. If you have been struggling to get these approved for, or you're going through other locations, regional, top-tier A banks, or credit unions, etc., this is what the purpose of this video is, and I'm going to get to it in the next 5 or so, after the next 5 or so minutes when I cover KeyBank. So KeyBank, somewhat similar, but you do want to have higher credit. They have these standards where you should normally have a 720, if not 700 and above FICO credit score, and they will normally pull from Equifax. Not to say that it is strictly Equifax. They could pull from some of the others, sometimes two, out of the 3 credit bureaus, but it just depends on the geographical location. But normally you see from Equifax. And they have a high enough standard, so similar to what you would think on a Truist side or other forms of banks, credit unions, and things like that. Credit unions can be more lenient, but you have to see how much you get approved for, how is it reporting, and is it really useful for you. And so another thing too is to look at how many unsecured accounts you have open in the last 6 months. You don't want to have more than 3 unsecured or just open account, or 3 accounts open in the last 6 months, I should say, or unsecured. You can add that on there. And a lot of the times with a lot of these, like secured auto loans and mortgages, things like that may not be applicable, but you don't want to have more than 3 open accounts normally in the last 6 months. Similar to other locations, other places, you don't want to have more than 3 hard inquiries or just inquiries there in the last 6 months. No more than 2 to 3. A lot of the top tier banks, not to say that KeyBank isn't top in what they do, but a lot of like the top A tier, like Chase Bank, Bank of America, US Bank, and these, they don't want to see no more than 2 to 3 inquiries from the bureau or bureaus that they will be pulling from. And a lot of the times they want underneath 30, not even 40% utilization on your account, even closer to 20 and 10%, depending on your credit range and a few more things. They want to have more than 4 years in age history. But with something like KeyBank, it's a little bit different, and they have products on their up to 50K line of credit, as well as their up to 50K in their 0% interest business credit card. So that's very helpful. You can get 2 at once. You go in there. It's very helpful. A lot of the times you don't have to have a previously established relationship. Sometimes those lines of credits are not available in your location, or at times they pull away from that, and that tends to happen with others as well, as you may have already noticed. But very helpful there that you just got that information. Those are bits of details to it. Of course, there's a little bit more to it, but I'm not going to cover too much of it. I covered some of this already in different content. I'll try to link it to you down below with KeyBank and a few other ones. But what are some of the alternatives? Like you're hearing on these, like Truist can work with lesser credit, but if you have higher credit, the business line of credit is there. If you have lower credit, you might be able to work something through the personal and the business side together. But what if that were not to work? What if KeyBank, First Citizens Bank, Navy Federal, NIHFCU, a lot of these banks, or a lot of these locations, I should say, credit unions, wouldn't work? So what should you do instead? And that's the focus of this video. So you might be thinking, hey, the banks or Chase Bank barely gave me 50K because it was based on this. These are the points. And then I'm trying to get one from Truist, and then I'm going to try to add one from KeyBank. Yeah, in a way, you could go at it that way, because if each one pulls from a different bureau, it's going to be a little bit different and different types of banks. But you don't want to over leverage your credit at the same time. You don't want to be that person who goes, I have more than 4 inquiries in the last 12 months. I have more than 6 inquiries in the last 3 months. When you're looking for specific funding, you have these hard pulls, too much recent activity. So what does that do? That offsets everything now. For what you needed for your inventory, for what you needed for startup costs, to design a website, to go purchase materials and supplies. You were thinking your ROI would have been this. If you had this material, you would have been able to double your revenue. You would have been able to go get this credit card and then get at least $100,000 in use of it over 6 months to be able to generate you $180,000 in net profit. Okay, great, but what happens when you don't have that? What are the alternatives? So you may think, okay, and I did a video on this. I'm going to try to link it to you down below. Go watch that. It'll be on the 250,000 business lines of credit. I made that most recently, and a lot of this stuff gets updated, especially with lines of credit more than a lot of things. And it's a hard market for many. So I'll link you to that video down below in time you can check out if you're watching this on YouTube later. And that'll detail the different types. But just as a quick run through on those and what I went over in that video is, yeah, there are multiple options. There are fintech lenders, different fintech lenders and providers with different requirements, and different people don't understand exactly what it takes to qualify, or what would render them ineligible. What would make them not be able to, one, want to apply, but then two, when they did apply, did they really know what they were going through? So many people do, but yet they don't know why they were declined. That's the problem. And a lot of the times you don't get that feedback, especially if you're not working with a broker. And if I didn't say this, I'm a broker / funding expert, pre-underwriter / underwriter. I've been in this for a long time. And I know how hard it is on you when you're just getting started, when you've been in business for some time, whether that option is or is not available. I've been there. And I've educated myself, so I'm not much of a talker. You see me here. I'm more reserved. I'm quiet. I'm the analytical, introverted type. To this day, it's hard for me to be on video. But I know this gives you a lot of value and impact in a different way to package that and help you and streamline things and really show you that I'm here for you and that I do care. I care about you as a person first, and then in your business second. You might be like, what's the catch? There is no catch. I've been an entrepreneur, business owner for a long time. I run multiple businesses. I have one in the digital marketing agency, lead generation business. I did that one way before this. One in the health affiliate marketing space with vitamins and supplements, showing people how to relieve their back pain and issues that I had in the past and still kind of go through. And then ergonomic desk chairs, office things, making sure you're ergonomically friendly, posture, stretches, the seat cushions. I have one right behind me. I have one underneath me. And other products that I've helped people and I've educated them on, and proteolytic enzymes, fibrin, what does that all mean when you have arthritis? What does that do? There's a lot of other instances too that I've helped out people. Other verticals in the affiliate marketing space as I ventured into those, showing people how to understand a lot. And then also what systems, what processes, if any automation that I've used to a degree has been able to help me in my business, and sharing that with others, the systems that I've used, and just working with them in various ways. And then over time, having other ventures, and now this has been my primary focus as a business funding expert. And I look at documents every single day. I kid you not, this morning I have a set schedule where nobody bothers me, and I'm going to look at documents. I'm going to review bank statements, tax returns, P&L, balance sheets, debt schedules, you name it. I look through it all. Credit pulls, I'll look through that. I have people who've sent me it this morning. I even looked. People have just been sending it to me without me even asking it for a lot of times. And other times I will ask for it. They have that much trust in me. And I'm a Libra, so I'm very well balanced, emotionally controlled, very loyal. You don't have to worry about that with me. And again, I'm more of the introverted, analytical person. I studied in school sociology, played a little bit of Division I soccer, and then I moved into chemical engineering as I wanted to test my math side, and that went well. But then over time, I wanted to start a business, so that was really hard for me. And I had to pivot, but it was the best decision that I've made. And I went deeper into the business side. I had already satisfied requirements for those and those classes and other hands-on stuff that I've already done. And then over time, I got into it, not right away, but then I worked in construction, manufacturing, warehousing. I've done a bit of retail stuff. I was a ramp agent at some points in my younger 20s, a lot of this. And now I'm in my 30s. And I know how hard it is. I actually worked the field position. I had to drive to job sites, had to get in manhole sewers for rehabilitation, move tools and supplies, drive camera trucks, fuel the trucks, get into the shop, move things around, get it prepared for the day, work in different parts. How to drive a forklift certified, confined space certified, worked in manufacturing, aerospace, worked with family in construction, worked with family in aerospace. My dad, he's a machinist, CNC, does a lot more of that, was a grinder before that. And then my mom's medical, my brother, younger one, he's in real estate at the moment. And so having to do a lot of this, working with machines and manufacturing, looking at the tooling, working in the rooms, the blueprint rooms, looking at dimensional analysis, to then later getting into financial logistics where I was underpaid, I would say undervalued. And unfortunately, the company went down under and I had to go back on unemployment benefits and food stamp cards, not for my own doing, but because the company wanted to relieve 50 plus people. I was one of them, but I had to go back on unemployment benefits and food stamp cards. That was the worst. And just me going into the grocery store paying with my EBT card, I couldn't even lock eyes or look at them. I just felt so embarrassed and I felt so guilty. And even at times when I would just do that and be thankful to just walk out of there with my bags, but knowing that I'd have to do this again. And I knew something had to change. And I couldn't continue this way because I felt like a burden, even though my family wouldn't say that. It's like I couldn't go out and just pay for a meal, or when I could, I didn't feel comfortable enough doing it. And it happened day in and day out. Feel guilty even splitting something 50-50. And yeah. And so at that time, though, fortunately, before the company went down under, I was preparing for a merger first, and then they relieved us. So there was a merger first with another company, and then they relieved us. But at that time, just like a month or so before, I was already preparing for a lot of this. So in my financial logistics position, where I was looking at a lot of data and doing things, not being paid what I was worth, not being able to move up a position, I was there for more stability, lifting boxes, not even physically built or any of this, but working for a huge contracting company servicing HP and Peace Health. Had to do that for some time by working on the computer too, a lot. And so I had to move things around, had to coordinate things. I was doing a lot of coordination as well, training people, doing things like that. And what I was getting paid, I was like, this is unbelievable. But I was there for stability reasons and for a lot more. But yeah, I was in my little cubicle space. And I can get into this a little bit later, but long story short, a friend of mine just got in contact with me through the Snapchat social media app. He replied back to an image that I shared about teriyaki food the night before, and we got into conversation. We connected again, told me about his trucking business, and then I got into the context of e-commerce and digital marketing, and I knew those things already, but even more, I learned a little bit. And then I literally went home that day, and the rest was history. I got home, started my research, began a website, began putting content up, began targeting different people in different markets, helping them acquire more leads, build their websites, build their landing pages, their email marketing, everything like that. So I have a lot of extensive history when it comes to this. So back on topic, I know that was a quick, here's your brief commercial interruption. Not that. But for the business lines of credit, the alternative ones, they're hard to get. And I say hard right now in this market. It has become a little bit more lenient in terms of the credit requirements, because before you would normally see a 700 and above on all three consumer credit bureaus, or sometimes just one on 700 FICO Experian. And then others would look at it and go, what business credit do you have? They'd want to see something with like a FICO SPSS, or at times they'd say, I want you to have at least a paydex score of 70. And those are more of the bank related lines of credit that they're going to ask for, and they might even check on, and that'll help you also get an approval of a higher amount. But what happens with fintech lenders more, let's start there first, is they're going to look at your credit. They're going to look at your personal credit more than they do your business credit. They're going to value that more than anything. Your business credit, to some of them, are important, but it is not the yes or no that decides whether you can get a business line of credit with most fintech providers that are out there. And I work with the best guys, so you guys are going to get the very best. And with me, literally I can be an underwriter if I just wanted to. That fits my personality more. So think of this as you're getting like 4 different things with me than you would have been able to get with just one person. And what people need to look at more than anything is the person behind it. And like I've said, I do care about you, your well-being, your health, and your relationships first for everything. And then after that is a subsequent of your wealth and your business and in other areas of your life personally, and from there. But with a lot of that, they're going to look at 700 plus credit. 725 is better. If you have 750, sometimes even a Chase Bank would look at that. They become a little bit more lenient where they can even go under that, like 700, 680, 660 at times, but the approvals won't be as much. And if you have multiple owners in the business and you're going towards a bank, yes, they're going to kind of look at the average of the two, or they're going to weigh one that's more heavier. They're going to look at the reasons behind why the credit has dropped. Is it just due to utilization? Is it due to anything else that is outstanding out of this requirement where you're missing payments? If you're starting to miss payments, one owner or just the only owner, that's a big issue. So that's one thing. But with fintechs on this side, they become a little bit more lenient. Some lenders, not all, are just going to look at a 675 plus FICO Experian credit score. Sometimes they'll pull from 2 to 3, or they'll look at them all. And then you can go as low as 625 and above. Now, that depends on a few things. That depends on your revenue, that depends on the quality of their credit. Why has it dropped so low recently? Is it just due to taking a lot of credit card debt that we can work with? That's fine. High utilization, DTI, a few factors like that. Maybe you're too over leveraged, you're applying too much, you're getting decline, and it just won't work. And there are other reasons too. So that's one thing. A lot of the times they're going to want to see in this market becoming also a little bit more lenient on revenue, 200,000 or 250,000 plus in annual gross revenue, preferably 2 years, but 1+ year at times could qualify. And it's not to say that you couldn't get in with the 550 or 600. It's become a lot harder to get it at that level. And then if you were to get into that level, like certain states won't be able to qualify, and other ones, they would be an exception to certain states within a year or 2 years in business. So that's a little bit there. There's more details that I can get into. I'm not going to get into all of it in this one. I'll try to link you to the content in the description. Check out that business line of credit video I made over an hour, and I went in on screen and I showed you the details, the requirements, how it works, if this is your scenario, or I could be more personalized. And the other thing to do is in the bio, if you link click, there will be, or I look at it 2 different ways. I have a link tree, and then if you're on YouTube, so if on YouTube, you can click in the description. It should be one of the very first 2 links. If you haven't done this, feel free to fill out the questionnaire form that is there. I created all of that myself with my expertise that you're getting, and read the parts of it. And then you can go ahead and simply fill out a form. And what I'll do is that'll land in my email. I'll then take the time to analyze and evaluate it and give you a proper response back, even with a PDF via email, showing you your best funding option and options thoroughly broken down. This is like nobody else's business. This is information that is not even publicly released, even things that there are not public lenders or certain ones that don't want me giving out information. To a degree, I can't give that out. But other things I can, and other things that people are just not sharing with you enough of. This is insider knowledge. This is things about being in meetings with these lenders, these underwriters, these providers, understanding my stuff and knowing how to do it best. So questionnaire form, there will be one for real estate, one for business in general, working capital, growth, expansion, payroll, rent, utilities, things like that, and more. But going back to this topic, there's the fintech lenders right there that are looking for that. Preferably more years, time in business is better. Some of them still want 400, 500,000 and above, maybe 750 and above, depending on the industry. Others would want you to be doing at least 100,000 in annual gross revenue, in monthly revenue, like construction, even trucking. And even then, certain lenders will not lend a line of credit to those of you who are in construction of all classes, trucking slash transportation of any, for any restaurants, real estate, fix and flip, rental, even property management. You're a broker slash agent, buying and selling homes, listings, things like that revolve around any of that. And there are other industries as well that could be ineligible. So what I'm seeing more with those fintech providers is they're deeming more ineligible industries because there's fluctuation in depositing. There's too many things where people are not getting their account receivables. They're stretching out their payments now over 60, 120 days. Okay, first it was 60, now it's 90, now it's 120. When are you going to have these funds deposited in your account? Plus, you're still dealing with these contracts and you haven't fulfilled on it, and you haven't gotten the money that you needed or the return on investment that you were seeking yet. So deposits for the week or for the month are only 1 or 2. Fluctuations going down, you're losing things. There's a lot of other problems. Even if you're going upwards in revenue trajectory, it's still hard to lend for a lot of those industries. So there's a little bit on the business line of credit for the fintech providers. Of course, there's more. I'll leave that video that can go into that and even more in specifics. Now, when you're looking at bank lines of credit, as we somewhat said earlier, like through Truist, there is KeyBank, there are others that are out there, But with some of these other ones, there could be more private banks, there could be more publicly open, there could be more of these FDIC banks that are a better route and alternative, and they're going to look at revenue though being generated. It's not typically no doc like some of these others through potentially a Truist and a KeyBank. They're going to look more at your annual gross revenue like the fintech lenders will. And they will sometimes ask for more information, like a year's worth of personal and business, or 2 years, 2 to 3 years in some cases, of tax returns. They're going to look at a little bit more. They might ask for a P&L. They're going to ask for a business debt schedule in many cases, and a little bit more. So be ready to have that and supply that. And they're going to ask for like 3 to 6 plus months of bank statements in many cases. You're going to see that. But with them, they're going to want at least 250,000 in annual gross revenue. They could be a little bit more lenient on the credit, like 660 FICO Experian. But other ones are going to want 660 on all three consumer credit bureaus. It just depends on where you go. And the strength of having 660 on all three as opposed to just one is much greater. So until I know your situation, until I know how much actual credit you have right now, if you have other lines of credit, credit cards, other types of funding, what are the chances of this, or how much potentially are we looking at in an approval? Because a lot of banks usually approve 10 to 20% of top line gross revenue, and then there's a few other bits of numbers that we look at to determine that number in association. So there's a little bit there to look at. And if they're going to do 660 on all three consumer credit bureaus, they're going to want at least a paydex score of at least 70. I know it's up there, but having generated a paydex score shows that your business can take on some debt, can take on some payments, can take on that burden and bounce forward. And it's not like you're going backwards over and over and you're getting into a lot of issues. And now you're falling behind, and now your personal credit is then later on affected. You have derogatories, all these issues, especially when you go to like a Truist and PNC Bank, I was going to say, but there's other ones like that. There's a KeyBank, First Citizens Bank, there's a lot of other ones, but having those derogatory marks, charge-offs, and a lot of late payments, bankruptcies, anything over 4 years with like a Truist, even a KeyBank, or 5 years, and you've had that discharged, not just dismissed, but discharged, can help you, and that's where a lot of people then look at getting approved. But that's again that's on a disclaimer, that not every person will get approved. It just depends on the case-by-case basis and how much you already have underneath your personal credits that's been not being used correctly. Let's just say it that way. So that's a little bit on that. I can go into it deeper. There's another line of credit for like a 660 credit. Sometimes 680 is what they would want. It's better to have 700 and above. And they're going to ask for it from one score, and then they're going to ask for a FICO SPSS Business Liquid Credit Score of at least 150, if not 155 and above. So making sure you have enough business credit is very, very important. So I think that's where I'm going to leave it at. There are definitely more lines of credit. I can go into that subject for many, many hours. I can get into how exactly you should use the funds. I work with business owners every single day. And what I share with you and others is the major difference between me and somebody else is not only my commitment and my experience, my versatility, my flexibility, my resilience, my reliability, my loyalty in my own business, in what you're going to get from out of my business and the brand itself, but also who I am as a person, somebody who doesn't spew in your ears. I'm not naturally the salesperson. I don't even like that word. And even if it's used in the right context, I just didn't grow up with that. And I'm very ethical. I do things right, and I'll do it by your side. I won't overpromise and underdeliver. And when I tell people this all the time is the reason, and I ask people, why did you go to them as your source? Why did you turn to them? Why did you do business with that person? Even if it's not funding, can you give me more than an answer besides, well, they gave me the most amount of funding, or they delivered the product with an extra offer on top of it, or they did this part of their business accurately. Anybody can share that with you, but how many times when you get asked that question will you respond first and foremost with it's about character? What I found in the owner, what I found in this person is they shared with me a little bit about who they are and how they got to where they got to. How did they learn all of this, and what led them to be more inspired, and how do they have those values and vision and mission to what they do, and those beliefs? Do they align with me or not? Do I see it the same way or not? Do I need to change my own belief, my own misunderstandings about things, my own attitude, my own characteristic traits? Look at that for a person. Yes, I can do as much as I do on the business side, and that's why a lot of people turn to me, but more people turn to me when they figure out that it's not necessarily from the business, because I can deliver there very well. We usually beat offers too, for the most part, do it right. But who is Michael? Who is Sally? Who is John? What have they struggled through? And I don't mean just their business, but what have they struggled through, or what are they going through in their life? To a degree, you don't have to open up much. I don't expect that. I have a hard time opening up to people and trusting people, because time and time again, people, especially in the funding world, will show me that they are not to be trusted. They are not actually loyal. They talk more than they do. They don't take action. They just speak. They like to hear themselves, or don't like to hear themselves, but are not accountable, and they're not responsible They're not mature enough. It could be a lack of knowledge that I'm willing to help with. But then after all of these sequences, where are you then? You have to look at yourself as a person, what you do in your own personal life, your own health, your own relationships. That matters a lot to me and plays a huge role, because the business funding is one thing, but does that have any impact on yourself over here in your personal life? It can. Are you going through a marriage issue, a divorce, or you're going through a court order, or you're trying to get through something in your life and your kids are looking up to you and just can't go to their events and you just feel so bad why you can't do it? But why is that? What would I be able to do to help alleviate that, and you be able to show up for that event, for being there for that extra hour or two, and being there, picking them up from school, doing all these other things, going out on a vacation and not having to stress out about what's going on in the business. Actually, when you're on vacation, you're kicking your feet up into the sand and then you look out into the water, your spouse is right next to you too. They're not saying much. It's all complete silence like you wanted it to be. But before, they would have been bickering. Before you even got there, they would have been telling you this and that. They would have been complaining. And you're going through all of these mental burdens and issues now that you don't even know what to do. So I care a lot about that. But that's where I want to leave it at. I appreciate you guys. Thank you for joining. Thank you for listening. Thank you for hearing me through what these business lines of credit are, or in terms of some of the qualifications, to the extent. And if you can't get that funding, if you can't get a business line of credit and you're thinking those won't work, you try to go over here with Fintech or other banks that are going to try to approve you whether you get enough or not, you also have to look at what the alternatives are. And those could be lump sums funding. Those can be in terms of a hybrid cash advance / term loan. They can be an SBA loan if you are applicable to it. Not everybody is. Equipment loans, credit card stacking, or creative credit-based funding. I do a lot of personal term / installment loans, personal lines of credit, credit cards on the business and on the personal side, whether the 0% interest or not. 0% interest business credit is much better. And there's a whole bit of a process to that, liquidating the cash out of these cards, using that to purchase real estate or for other reasons that you have to pay other suppliers, vendors, whether you're just maybe doing that ACH wire in other forms. But there are various different products that are out there in the market. And there's different requirements to each. Like Fintech lenders, a lot with lines of credit will only approve 40 to 60%, sometimes 50 to 100 or 50 to 150%. But in this market, a lot of the times you see maybe 30 to 50, 30 to 60% of monthly revenue. And on your lowest month, a lot of the time, certain banks will approve only 10 to 20% of your top line gross revenue. They'll look at the last year and they'll do a few more things. And then lump sum funding, perhaps 25 to 75% if it's a low amount of revenue you have and we can qualify for. Other times it's 75 to 200%. When you get started your first time, it might be 100%, it might be 75, it might be 110%. But once I understand the file more effectively, then I'll be able to have those answers. So those are those options as well that are aside from the alternatives of like a Truist. You have a KeyBank as well as others. You have these business lines of credit on this side that could potentially work that you may not be paying enough attention to, and vice versa. If you're looking at these, could these other ones work with like a Truist Bank and a KeyBank and a few of the other ones, and making sure you're not over leveraged and not applying to too much, especially from one credit bureau that's going to pull from various different locations, understanding that effectively and doing it right. And then if none of that all works because you need more cash flow, because you do need to sustain that payment that is going to be structured better with the business line of credit, it can sometimes be more expensive. You let it occur month over month without paying down the balance or paying enough of the balance down, but you keep taking out more, readjust the amortization. Sometimes it does lower it though when you have lesser of an amount for your first one in a lot of other instances. Then you have these advances, you have the credit cards. So anything credit, collateral, cash flow, equity, liquidity, and more. I work with venture capitalists, angel investors. If you're trying to do a personal loan, a HELOC, or other situations, you're trying to do a cash out refinance, you have property, land, commercial real estate, investment real estate that you own, free and clear, all these other things I can help you with. And I'm always in the market. Thank you guys for tuning in. That's where I'm going to leave it to. All information down below in the description. The questionnaire form, again, is the best place to begin. If you got value out of this, please give it a thumbs up. Share it with others so you feel will find value from it. It can be I don't talk much, so I kind of lost that. It can be a complete stranger, a friend, or a family member. And if you have not subscribed, please go ahead and do so. And click that bell notification icon so you do not miss any future content I will be coming out with. And let me look up here really quickly because I was streaming this. And this was a spontaneous stream. So I did not broadcast any of this, and I wanted to do it this way. So 1 second. Like I'm frozen. Okay, we'll leave it at that. I appreciate you once again. I'm very grateful, humble, thankful for a lot of this. I never take anything for granted. I treat every single day as it's my last. Very structured and punctual, very disciplined in what I do. I know my stuff. When things change, I'm in it. I'm understanding it, approval amounts, ranges, looking at documents, everything, the whole enchilada. Appreciate you. Thank you all. Talk soon.